Okay, so here we have 2020, but in more detail, here we have the 4-hour time frame. These are IC market ticks. So as you can see, the price in my model, or in this case, the model that I tested first, this one, then I moved to understand if I wanted to go, say, holding long term, or I wanted to be more aggressive, cutting past the range. So after the price action with 2024, that it's been pretty interesting. It's not the worst case scenario also. It's only here that you need to manage this, especially these weeks. But it's a $150 move with a almost $50 or we safely say $50 retracement. Even here, we deliver a little bit more push with a little bit more downside. So I feel this is not causing any issue. We can also confirm with the buy model after 2022. You don't have any real issue. Here we have only the I need to adjust a little bit the buy model maybe in this part. We will work with this now. And for the sell model, I need to start adding the side logics because this is the backbone and it's very, very good. So what I'm gonna do is start, this is what traders do. We test. We are all day here testing. We're not making millionaire or billionaire fantasies. We're just understanding how market acts, what market is doing, what market already did, and what our EA could do in those similar scenarios, rather than telling you, hey, if price touches here and then retraces here, I'm gonna put a buy order and then chase what, you know? I tell my EA based in data, in levels, I trade by levels. I tell EA how to manage my margin efficiently. I don't open random lots, or I'm not just using progressions or triggering martingales like crazy. Like, let's see the sell model using the only backbone. I'm using fixed lots. So as you can see, our biggest loser, it's $72, is our main logic. We're opening 1, 2, 3, 4, 5, 6 levels. 5, 6, yes. And followed by some 0.05. So I think in this version of the logics of the EA, sorry, oh no, double 0.10, and yet we are managing 13% risk. But what I want you to see is this 0.10, 0.9, 0.08, everything is fixed lot, as you can see here. So let's see the difference when you add the progressions, especially those lots are just for the stops or the main logics. Really, those are not the ones that I'm waiting for make money. I just want them to be very as low as, not the risk to be low, because those are the ones handling the risk, but what I need is them to be precise, you know, because main logic is always 0.01. That's the logic that is telling the EA what's going on in the market. That's why I hedged the first two positions. I open buy and sell at the same price. Well, we know slips, spreads, whatever, but the idea is to open immediately on tick. As soon as you drop the EA, it will open to trace. In this model, for example, it's taking 20 pips, $20 moves, and $20 move to open the second level, and $29 move to TP with a $9 trail stop. So it means that, for example, in the initial stage of the model, you can expect that it will open trades, but it will be closing them. Like, only when major moves like the prices of 2006 happen is when the EA will start triggering more orders. And as you can see, it will do it very, very efficiently, because 13% drawdown, and we have here the move. It's not joke, you know. Like, I'm here not trying to lie to you. This is current past data. This is something that it can be fake. It can be fake. It can be optimized. It can be overfitted for these specific ranges. But I'm really showing you the sauce. It works. It doesn't matter if it's 1 year, 2 years. 20-year spectrum. Let me show you the idea will be to have the model working in every possible range. So the idea is to stress test the specific, for example, here we have cycles, here we have the years, and here's a specific range, for example, 2008 to June 6, for example. I'm limiting to certain ranges because, for example, we have some other majors like here I need to add the ones with 2020 because this is mainly for the buy model. So as you can see, I have a lot of 2011 and 2013. Also 2013 was a very dramatic spike, we could argue. Unexpected, especially because 2 years after the USA debt crisis. So really we could say this is 2020, 2013. So as you can see, your EA is able to or capable to manage any type of scenario or situation, and the strategy is bulletproof. That's what I take too much time optimizing, especially in the backtesting, not only demo or forward testing with sent accounts live. I love to backtest because that's provides tons of information, tons of value. It's the best edge we have over any other business. And it's funny to me that everyone says this is worth nothing, right? But if you're trading manual and probabilities and whatever, you still need to backtest, right? You're using past data to refine your model, because if you're only using current data, you're just guessing and using future data to start creating your model, and that will take tons of times. And I can tell you safely that it will fail at one point, because, for example, you don't have this 2011, this 2013, you don't have max stress ranges in your data and your model to properly confirm that it's valid, you know? For example, I stress test without time filters and use filters just because I need something clean. I don't use indicators. It's just pure price action, grid multipliers. I'm able to do this with simple stuff like archetype CGs. Don't overstress, don't overcomplicate things. The more complex this stuff is because they want to sell you something. Good stuff is easy. Anyone can. I'm gonna show you my last V2 model. The V2 version of my EA is already free, so you can ship better results because I'm gonna update this. I'm gonna add one hard stop and one soft stop to make it work more smoothly. But for now, as you can see, we have the model that I was using for V2 as investing. It had a max stress. I was max stress testing the ranges. As you can see, this model was giving me 85% during 2011. That's the range that I was testing, 2010 to 2014. But in 2011, it gave me 85% drawdown. When you run the 20-year span, you can see that it is reducing because of the... It uses profits. It doesn't compound the profits, so it will use those as equity protection. That's how I want it. So I will know which year is my worst case scenario, because if I'm not compounding, if I'm not using complex methods of execution and exits, I can know when my EA is getting stuck. So basically that's what I did here. I found 2020 and I decided to cut the range. So instead of going the whole 20 years, I went first to 2020, reduce the size of the sample, and stress test in the specific range. This case is the one that I'm showing here. So the last trade is at 1691. So EA is not able to clean here, for example. So those are the details that I'm gonna handle right now. So the idea will be to have the best possible. Actually, that's the old model, the one that wasn't cleaning. As you can see, this one is already cleaning because I don't have the big spike. What's going on with the old model is that it's placing the trade here, so it's managing the margin very efficiently during this trend. So the idea is, even if that happens, that you get stuck in a very hard trend. This is, we know it's $400 move. and it will be 383 the one that you are taking. So as you can see, 50% drawdown with usually, for example, the 0.10. Show you this 0.10 will be actually 0.01. I wanna, or at least we'll be starting with some 0.01. Oh, 0.01 and a very slow. Good morning, guys. So we are back after some testing, some updates. Especially the optimization text. This was scary to hear my voice. But well, you know, so the idea will be that to have the progressions very smooth, or we can have them fixed. Like my main logic, the one that is always setting the tone for the EA to understand where it's going or price, what is price doing, you know? This is the main logic. It's always 0.01. As you can see, I trade by levels. I don't need to add a martingale to the main logic because I will be draining the margin. Why? Because I know it. I can just do it. I can just add the multiplier and you'll see the difference. So let's move to 2020. Let's have a smooth test. First, I have to keep the 2020-21 for 1 year, and then I will be reducing my range. First, I need to see if it's 2020 or 2011, the one that is giving me 13% drawdown. And when I find it, I might reduce it, you know, maybe 5-6%. Who knows? Let's see what we can do today. And with the buy model, I'm gonna, let's go to 2021. Actually, I really want to test or stress test 2022, so let me give it a try. I think maybe after, let me see when this trade was open. 0606. 0606. Yeah, it might work. So let me do this. It's closing very ugly, so that's the point that I mean. So let me show you in the chart what's going on. Oh. Okay, so essentially what's going on with the buy model in 2022, 2023 is what I was showing you previously, is the 23 range. This is the actually the live range that I traded and was my worst. Funny because I needed that move to optimize. Actually, this move was the one that generated B2. After this move, I was running B2. Just is 6:56 a.m. so I took my first coffee, so give me a break, please. So after this move, I ended up with the B2 version. It was more efficient. Why? Because after that I tried to live this move. You can see it was a very, especially these two candles were on a Sunday, the two on the Sunday open. So this particular move was in a, let me show it, was in one session. So you had a $170 rough spike to the downside that really, it was in a Sunday. So if you left positions open and you were like chilling, I'll wait for market, no news, whatever, then that day you'll be smoked, you know. So you need to be all the time cautious. I'm always trading 24/7 with the, well, 24/5, we know, with the investing model. I try it to be 100% automatic as possible, especially now that I'm back with the copy FX. We're back with hot Forex, now HF markets, 250 USD minimum for the free portfolio. And now we have premium plans that we have two plans. One will include the B2, well, actually the free and the second plan include the B2 version, plus the premium plan includes support and everything, so you can create your own model, you have your own strategies, your own tool. And for the VIP or the high roller group that we are opening, that will be the ones that are getting the B3 for free. I'm not selling the B3 anymore for now because it's not worth my time. It's people only want my system for them to get or either 100% profits in 1 week, or they want to smoke prop firms with 100% win rate. So I really need to educate first people, or get people that already are not experts or knowledgeable, but at least that know what it requires to sustain long term in markets. So EA can be very capable of doing a lot of things like prop firms and 100% in 1 day. But the idea is that you need to have this skill and know, for example, the risk. Like, I'm a risk manager more than a trader. Anyone can trade. You place a trade, you're already trading. But the idea is what I do here is to know my risk. I know my margin. I know my limits. I know what my account will do in the worst case scenarios. I know that even when there's no worst case scenarios, EA will fly. Even in worst case scenarios are not worst case scenarios for me, because those are the days that you can see I'll be making more money. So the more I risk, the more money I make. So at least, as you all know it, it's a risk of reward. At least I'm having a 1 to 2, a little bit more. But that's not how it works with algo trading. Like 1 to 2 in these situations, it's not how it works. You're doubling your account. That's different, because it's holding economic trends or situations. For example, all 2022 and 2023, we had FTX, we had banks defaulting, we had the Ukraine. Then in 2023, 2024, we had the other wars. So we had a lot of geopolitical macro. We have micro events also in the same charts. We have Powell speaking, we have the rates, we have the Fed in general taking good measures for what we're seeing. We have indicators like the consumer price index, we have the core PCI, we have a lot of information, so we can be informed and know why price is doing what it's doing, so we can be very adaptive. But the idea is to not touch EA, because EA already know that price at one point will reverse. So it's not that we are mean reversion, or that we are retracement or reverse trading traders. It's just that the model and the stress test of the model is built around not taking the probabilities on our favor, but the statistical data that we have, the edge with data that we have. By using all this information, there's a hypothesis that says that the markets are already efficient because we have all the information available, and also all the players and the markets are fair to the conditions of supply and demand. So that means that at least assets like gold, that it's real, and the dollar that is backed by the at least the strongest economy nowadays, those two assets hold very valuable information and data with 20 years spans. Why I don't go more than 2024? It doesn't matter. Like, the commercial or the electronic trading with brokers online and internet really boosted, in the 20s. But this stuff really started shining during the in this case, the prime crisis in 2008, 2006, when money started to flow into the economy, and really not into the economy, but new money. It was again flowing. And until 2011, when they announced the debt crisis was done for the USA, they will be able to pay the debt. Well, as you can see, this is how hard the price will, or this is how hard gold will devaluate against the dollar. Smart investors want gold and dollar. They're not fighting each other. It's not like Bitcoin, and even Bitcoin traders need to understand that if USA disappears, Bitcoin has a USD next to the quotation, so everything will affect the US dollar. So my point is, everything will disappear before gold, and then everything will get smoked before the USD dollar, because at the end everything is backed by the US dollar. We're seeing that with the oil prices, that they want to slowly move to use other coins, so that's affecting this is something that you can also see in the You don't even need to go to the DXY or to the crude oil, I don't know, the quotation, WTI or something like that. You don't need to go there because you already know the price of gold is bullish. Like gold broke multiple all-time highs this year after the Fed told us that they will be cutting rates this year, that the economy will be floating again, the debt will be not rise, blah blah. Not empty promises, but they're economists. They're trying to fix your and my and everyone else's situation, at least the macro, by taking measures with the data that they have. So that's pretty much what I do, having a counter trending model that doesn't use probabilities and really you know what it's gonna do. Like if you see price moving up or down very aggressively or very sustained with no retracements, you know your EA will be placing slowly. At B1 and B2 model were very methodical in the way they place trades and how they close them. With B3, what I want is the EA to do the same, but also at the same time to be stacked. Like we could say we have two B2 inside the B3 and one new logic at the end, both trading the same ranges. Like if price goes up, my idea is I need to be exiting margin, and we can see it very clear. For example, here, as you can see, we have, as mentioned, the 0.01 as the main logic, and we start here with a 0.02 that it's the secondary logic. I start with secondary logics at one point. So far, I haven't opened too much. So here we can see we have already more secondary logics, but here we don't have any 0.01 or any main logic. So here, a little bit, some minutes before the main logic closed the whole basket of trades, this model was already exhausting the margin. It's not only here. Here we have 0.02, 3. Here we have another basket of orders. As you can see, we don't have 0.01. That means that EA is smartly placing your margin in zones that it can also take it out. What I mean by take it out, that it can, we're testing 2022, 06, or less. Let me tag it here. Let's here. So what EA is doing is every time price is going down, here brush, every time price is going down, you're getting stuck. Here, for example, here was a buy, but the retracement was enough to close. And if the retracement is not enough, for example, here buys are getting cooked. All this range is cooking the buys. But all these weeks, all those weeks that you see here are the ones that we are closing. So the idea is to, even though the price will at one point do whatever it wants and massively drop pips, I don't care because I already make money here. I already exhausted my margin, and actually as a swing trader, I want, it's not that the EA is a swing trading, it's like the EA adapts to every situation. That's why we trade by levels, so we know if price is moving very aggressively down and it opened the 8 level, for example, we already know that price is trending, so I'm gonna start using, or EA will adjust. Why? It's not doing something like AI or it's not magic. I already trained the model so it can adjust to every possible situation. That's why I try to max stress also by using the specific ranges. But the idea here is, for example, to know the limit of the model and how the EA can be managed, because when you add time filters, when you add news filters, when you add every other stuff like compounding, or when you use the profits as equity protection, or you compound them, or you withdraw them, that also works as a risk mitigation. Well, you have a lot of tools in your hands to prevent those scenarios where you're having, for example, I don't care this as 71%. It's actually at 38% because we already have profits before the move. We get there with 10% profit already, so we could say it's a 1 to 2 profit in this case, in case we have a worst case scenario. But for example, here I'm balancing to give the biggest lots to the highest levels. So If I wanted to trade more aggressively the range to have this 10% boosted to 50%, I would have to be more aggressive with my initial logics. For example, this 0.02, make it 0.05, add more multiplier, for example. I don't know. There's tons of things. I can only tell you as a fact using data and show you with the data. If not, I'm just guessing, I'm just dreaming. So the idea is that the EA in these situations will be able to diversify margin and properly do it, because if I put very aggressive the initial levels, once I need to use margin and distribute my margin efficiently, I won't be able to do it for two factors. First of all, the main orders or the first orders will be already draining my margin, meaning I won't be able to open the lots that I need to close at this stage when price trends $500, you know? And also the drawdown at one point of the first orders. Like, it's very different to have 0.02 stock at the beginning and 0.05, you know? That's more than double of the drawdown that I'm having currently. So that's already a sign that it's not gonna hold the max drawdown if I do a simple change. So what I'm gonna do now is adjust I'm gonna mainly, with the buy model, I'm gonna mainly adjust by logics and by engines, so I know that I have the best combination possible in case price, because the idea is worst case scenarios are only in 20 years we only have 3 max, well, from 1 to 3. Not every scenario is bad. For example, 2 of the worst case scenarios are for sales, because price trends, it's 2011 and 2020. What we know, 2020 gives more, it's giving more drawdown, or at least is what we think. That's what I'm gonna test the specific range and see for a fact if it's true. If not, I'm gonna go to 2011, and then if it's 2011, it makes sense also, then we adjust using 2011. But for now, let's do that, and let me get a coffee because I'm very sleepy today. Jeez.